up guys, this is Sajal Ligam and welcome to Macro Mindset, where economics is made simpler. So today in this video we are going to talk about the central bank. Now it doesn't really matter if you're from the economics background or not, but by the end of this video I assure you that you would be knowing almost everything about the central bank. What is the central bank? What's the history behind it? How was it formed? What are the functions? How will it control inflation or deflation in the economy? Almost everything about the central bank will be covered in this particular video. Stay tuned till the end. Now the first question which arises when we talk about the central bank is that what is the function of central bank? What does it do actually? So to understand this, I've created a very simple to understand analogy, and that is of a college premises. In college, what happens? There are societies, and then there's student council, then there's college authority, right? So let's say we'll understand all the functions of RBI through this simple example, and that would be very clear for you. Okay, so the first example would be that let's say there's a function happening in the college premises, and every society, there are many societies, some of dance, of music, of writing, of speaking, very many societies. And now each society has to distribute tokens of maybe food or purchasing anything, right? Now who issues those tokens? That tokens are issued by the student council or the college authority. Now, what is the student council or the college authority? In our case, it is representing the central bank of the country, whereas the societies in the college are representing the commercial banks in the economy. So what happens in the real case is that RBI is the apex institution. RBI in our case, it's Bank of England in the case of UK, and the Fed in the case of US. But coming back to the point, so what happens in our case is that the RBI or the central bank in the economy is the apex institution for issuing the currency in the economy. So that is something which we correlated with our example. Now let's move to the second function of the RBI. Okay, to understand the second example of the central bank, let's stick to our previous analogy we made. So this time the college authority or the main admin office we can say is the government of India, while the student council is acting as the central bank. So what happens if the college authority or if the admin office feels that we want a safe place to keep some of our money with them, or maybe we want a certain place or we want a certain institution to handle our finances, they will delegate that responsibility to the student council. And that exactly happens in the case of economy also. The RBI is acting as a banker to the government. Why? Because it handles almost all of the payments, receipts, borrowing, lending of the government. Even many of our RBI governors go to ministries, and they go abroad also to settle a lot of the financial decisions which are to be taken by the country. Now let's come to the third function of the central bank. So what happens in our case in this college society example is that all the societies have to keep a certain amount with the student council for the cases of emergency. And now that exactly happens in the economy also. Commercial banks have to keep a certain part of their reserves with the Central Bank of India. Now, why does that happen? That's actually called the CRR or the cash reserve ratio. Commercial banks have to keep a certain part of that reserves with the central bank of the country, which is RBI in our case, and that CRR rate is also determined by the central bank. Now, how does that happen? We'll understand in the later part of the video that how RBI through its monetary tools can affect a lot many decisions and can change the rates which we just talked about, which is the CRR or SLR or the other variables. So we'll talk about that in the later parts, but for now this is the third function of the central bank. Now let's talk about the fourth function. Now the fourth function is, I feel, very much relatable, and we all might have experienced that once in our lifetime maybe. So what happens in our college societies most of the times is that when maybe something important has come up, many of the societies run out of funds, and now because something is very important and some expenses are very important to pay, they run to the student council to handle at the last moment. And that is exactly how we link it to our economy also. Commercial banks, when have to meet any emergency payment, or they have to pay something at an emergency basis, they go to the central bank, because central bank acts as the lender of last resort, that if nothing goes as planned, then I am here to help you guys. So in that way, central bank acts as a last resort, and we have connected that to our student council example as well. Now the next function is about clearing and settlement. So you must have noticed in your colleges that the societies have to deal with themselves also, right? They have to exchange money, or they have to, do a lot many transactions. Now the student council acts as a place, as a base where all the societies can, make those transactions and can act as a central clearance system. And that exactly happens in our economy also. The central bank acts as a central clearance system where all the commercial bank can settle their statements, can settle their transactions, and can have a balanced, equalized system. So through that, the central bank creates as a clearing system also in the economy. Now the next function we are going to talk about is again something which is very relatable, because I think we must have experienced this at least once, that in case of functions or anything's happening, the college societies start arguing with each other, or maybe one society starts to dominate or overpower many other societies. So who comes as the sole authority to regulate everything? That's the student council in the case of colleges. Well, if we talk about the economy case, here if commercial banks try to overpower each other, or maybe doing something mindlessly or taking some severe actions, then who comes as the sole authority to regulate them or to make a smooth functioning of them? That is the central bank in our case. So central bank basically acts as a regulator also in the economy, the regulator or the manager of the commercial bank. So it's also called the bank of the commercial banks or the bankers bank. So in one of the functions we discussed that it's the bank to the government, but it's also the bank to the commercial bank or the bankers bank. Now let's move to the next function. Now this would be the last function of the RBI or the central bank. So what happens if we go on with our pre-assumed case study only? What happens is that many times all the student councils of all the colleges have to communicate with each other. So for example, because I'm the student of Delhi University, let's say that there are all the colleges of Delhi universities, but the student councils have to communicate with each other. So that communication regarding, maybe the measures or regarding the orders of the university or regarding the money, everything has to be communicated with each other society. So each of the president of the student council communicates that with one another. Now, if we come back to our case of the economy, what happens is, to manage the foreign exchange reserves of the market in a country, the governor of the central banks of almost all the countries have to communicate and have to have a meeting. So that meetings happen in a lot of places in the world, but those meetings are very important because they actually help the central bank governors to ensure that how the foreign exchange reserves would be in the economy. So basically, central bank also acts as a supervision for taking the care of the foreign reserves of the country, because in the case of war or in the cases of emergency, the forex of the country is very important, and for that matter, the central bank takes care of that. So with this, we have discussed all the functions of the central bank of the country. I've taken that from the angle of India's perspective, but that is almost the same in all the countries also. So I hope that the analogy which I created with the college and the economy made this concept a little more clear to you all. Now we'll talk about that what has been the history of the central bank, or in our case, what has been the history of the Reserve Bank of India. Let's talk about that. Okay, so now we'll be talking about the Reserve Bank of India in detail. We'll actually go through a certain timeline of the Reserve Bank of India. When was it formed? When was the Monetary Policy Committee formed? And everything related to that. Let's get started. So actually, the RBI Act was formulated in 1934, but the Reserve Bank of India was established in the year 1935. Now in 1947 we got independent, and in 1949 the RBI got nationalized. So after 2 years of independence, the RBI actually got nationalized. And in 1991, we all know that there was a severe BOP crisis, but it was a tenure of Dr. Manmohan Singh, the greatest economist India has ever had. So the 1991 economic reforms came into the case, the LPG came into the case. Then after 1991, in the year of 2016, the monetary policy framework was formed. So I feel that almost all the RBI governors India has ever had, they have all tried their best to bring the economy to a point of stability. They have had severe economic crisis in almost all their tenures, but they have tried their best at least. So with that, the current RBI governor is Mr. Sanjay Malhotra. He's residing in Bombay, because the RBI bungalow or the RBI functioning, all of that, the RBI office also, the main headquarters also resides in Mumbai only. And the former RBI governor was Dr. Shaktikant Das. So with that, I think almost all the information regarding the Reserve Bank of India must be very much clear to you. Now let's move on to our third part of video, and that, my dear friends, is going to be the most interesting part. Why? Because we'll be talking about that how the Reserve Bank of India will take measures to solve the major macroeconomic problem, which is inflation and deflation in the economy. Let's talk about that. So let's start by understanding that what are the measures which RBI takes in the case of solving the macroeconomic problems of inflation and deflation. So we are taking inflation in our case study today. Now what is inflation? Inflation is basically too much money chasing too few goods. Basically महंगाई in the very simple forms, right? So now let's understand that how RBI takes measures. So basically there are two types of measures, quantitative and qualitative. Let's start by the quantitative ones. So there are 3-4 basic kind of measures which RBI takes. The very first one is the variables. Now what comes under variables? There's CRR, there's LRR, there's SLR. CRR is basically the cash reserve ratio. You remember in the first part of the video when I was talking about that how the college societies have to keep a certain amount of their reserves with the student council? That is exactly called the CRR in the case of the economy, where the commercial banks have to keep a certain minimum amount with the Reserve Bank of India in the case of emergencies. Now, the rate of the CRR or the rate of any of these variables for that matter is also decided by the Reserve Bank of India. Now, what happens in the case of inflation? Because in inflation, already there's too much money in the economy. Already there's too much demand by the public. So, what does the RBI have to do in this case? They have to curb the demand. So, what do? They increase the rates. When RBI increase the rates for commercial banks in turn also increase the rates for the public. So, when the rates are increased, the demand automatically goes down because now the public do not want to borrow a lot of money. And when that demand goes down, the credit creation or the money generation in the economy also goes down, and hence the problem of inflation tends to be slowed down to a lot extent through this measure of the Reserve Bank of India. Now let's talk about the second measure. And second measure which RBI takes through the quantitative policy measures is the bank rate. Now what is bank rate? Let's talk about that. Now bank rate is basically the rate at which RBI lends to commercial banks for the long-term purposes, right? Not for 1 or 2 years, but for 10 years, 20 years, right? For the long-term purposes. So what happens in the case of inflation? In the case of inflation, because as I said, there's already too much demand in the economy, so RBI again increases the rates. So when RBI increases the rates for the commercial banks, it becomes very difficult for them to borrow money. So now they also increase the rates for the general public. So general public also finds it difficult to take or to borrow a lot of money from the commercial banks. And hence again, in the same way as we talked about in the case of variables, the demand gets curbed, and in turn the money generation or the credit creation also gets slowed down in the economy, and hence the inflation problem tends to get slowed down. Now let's talk about the next case, and that is about the repo rate. So the repo rate is actually very much similar to the bank rate. The only difference is that the repo rate is the loan or is the amount given to commercial banks by the central bank for a short period of time. Remember, in the case of bank rate, it was for a long period of time. So in the case of repo rate, the loan is usually given for the terms of maybe 1 year or max to max for the 5 years. So in this case also, the functioning of the RBI goes in the same way. It increases the repo rate. In turn, the commercial banks slowed down their demand, and they also increase their rates of lending to the general public, and in turn, the money generation in the economy slows down and the inflation problem gets to get fixed, right? Now let's talk about the next and the last quantitative policy measure, and that is the reverse repo rate. Now reverse repo rate, as the name suggests, it's actually inverse of the repo rate. What happened in repo rate? The RBI was lending money to the commercial banks. So what happens in the reverse repo rate? The commercial banks are keeping their money with the RBI. So what happens that in inflation, again the reverse repo rate is also increased. Why? Because the banks, the commercial banks for that matter, are incentivized to keep more of their money with RBI and less of their money in the credit creation process, or less of their money in the money generation process. So basically what happens when the reverse repo rate is increased, the commercial banks are incentivized to keep a lot of their money with the RBI only. So now they're left with little money for the lending purposes. Again, now for the general public it would become very much difficult, and even for the commercial banks it would become difficult to lend more money to the public. Again, that would help in the slowdowning of the inflation problem and in the betterment of the macroeconomic stability in the country. So these are the basic 3-4 measures which are coming on the quantitative side of the monetary policy measures taken by the Reserve Bank of India. Now let's also talk about the qualitative side of measures, that what are the steps which RBI takes in order to solve the problem of inflation in the country. Now to start with the qualitative measures, let's start with the credit rationing. So as the name suggests only, RBI or the central bank puts a certain limit that after or beyond this limit, the amount which is to be lent to the general public will not be issued. Why? Because again, the problem is to solve the inflation, which is too much money chasing too few goods. So to solve that problem, what RBI does is it puts a ration amount, or it puts a bar that beyond this, the credit cannot be generated, which again, obviously it helps in the reduction of the inflation problem. Now, second point is the direct action. Now, direct action is actually a very qualitative measure, because RBI actually imposes a rule to all the commercial banks that you do not have to issue a lot of credit to the general public. Now, the other aspect is also moral suasion. Moral suasion is very much similar to direct action, because in moral suasion, the RBI is actually asking the commercial banks in a polite tone that please consider the situation of inflation in the country and try to reduce lending to the general public, whereas in direct action, it's a straightaway rule from the central bank. So these are the 3 actions. There's one more action which RBI takes in the case of qualitative measures, and that is marginal requirements. Let's talk about that. So marginal requirement actually means that whenever you go to borrow any kind of money from the commercial banks, there's a certain amount of money which you keep as collateral with the commercial banks. So the rate of that collateral, that maybe 50% you have to keep for getting a 10 lakh loan. So that rate is also increased in the times of inflation by the Reserve Bank of India. Now why does that happen? Because now to get that same amount of loan, you have to keep more worth of your collateral with the commercial banks. So that eventually tends the public to take less of the loans and to reduce the borrowing, and in turn again reduce the problem of inflation in the country. So with that, my dear people, we have concluded almost all the aspects of the monetary policy measures which the central bank takes in order to curb the inflation in the economy. And with that, we also come to the end of this video. We have talked about almost everything about the Reserve Bank of India, or for that matter, the central bank. In the starting of the video, I connected the dots with the college society so that it becomes easy for you to understand the functions or the roles of a central bank. In the second part, we talked about the history of the Reserve Bank of India. We talked about when was it established, its RBI governor. We talked about many things in the second part about the Reserve Bank of India, and in the third part, we actually talked that in the cases of macroeconomic instability like inflation, how does RBI take its measures to curb that problem. Now you have to do me a favor. You have to tell me in the comment section that what will be the measures of Reserve Bank of India in the cases of deflation. Okay, a small hint, it would be exactly opposite in the cases of inflation, the ones we talked about. In the cases of deflation, it would be absolutely opposite of that. You think about it and let me know in the comment section. I'll see you very soon in the upcoming videos where economics is made simpler by Sajal Nigam. See you very soon. Thank you so much.